Bill, great to meet you. Thanks for doing this.
Yeah, nice to meet you as well.
How are you managing all the chaos? The signal versus noise that's going out there right now.
Well, that's a complex issue because most of what you read in the media or see on television in the mainstream media is either concocted or just outright lies. And so there's no media outlet that serves up news items with a pro and a con and lets you decide what you think is the right conclusion. It's all basically editorial content. So that's a problem. And when it comes to finance, the market, you have the issue of a lot of uh, you know, Trump is prone to making statements and changing his mind and going back and forth. So that creates a certain amount of volatility and uncertainty. And then you have the fact that the market structure is been completely changed by the rise of passive investing, and the size of its market share has changed the character of the market dramatically in the last 15 years. And then you have the warpage from the Federal Reserve with its repeated rounds of QE over the last 15 years. And now you've got the fact that Trump will in fact take over the Fed with people that are going to see the world his way. And then the Fed demonstrating its incompetence by having this woman who is um, you know
This episode is brought to you by Vaulted. Launched by McIlvaney Financial Group, with Vaulted, I literally just tap a button and bam, I own physical gold stored in a professional vault. I can also take delivery at any time, extremely simple and less expensive than any other method. The do-it-yourself way to buy precious metals. Click on the promo link in the show notes or go to vaulted.blbvux.net/coffeeandamike. I mean, look at how easy this is. The Vaulted app on my phone, I can access it at any time.
appears to have committed mortgage fraud and plagiarism, and people, we allow so much crime in this country today that people say, well, it's just mortgage fraud. Yeah, she's on the Fed. So I think that shows how incompetent Powell is. I mean, Powell has presided over a burgeoning staff at the Fed that's kind of woke. Whether or not you are woke or not, or what you think of it, it shouldn't be the job of the central bank to get involved in that sort of thing. So you've got a central bank here that's got big question marks around it. The rest of the world's got issues similar to ours. So it's a really complicated picture, and then the stock market goes up every day because of the passive bid. So it's a complex mix. And I bring this up because if you don't understand what the actual game is you're playing and what the rules are, you're going to make a mistake. You might think you're investing the way that you learned 20 years ago, but that's really not what's work. That's not really, those forces are the forces that are work today are completely different from then and prior to that. So I don't know if I answered your question or not, but
No,
that's my
you
response.
no, you did, and it also the game has changed, right? Like the strategy that somebody might have had 20 years ago, that's not the model today.
Well, the variables and the forces at work have changed. Um, you it's still important to understand that um, 1 and 1 still makes two, even though you can get into a stretch where it can seem to make 8 or 9 for a long period of time. You have to keep track of the fact. I mean, what we have taking place in the markets today is not terribly dissimilar in many ways from 1999, except for the passive bid didn't exist then. And so that has a way of making the whole process take longer to play out, make it get much wilder. And so the point is that the market structure today, last 5, 7 years, is completely different to what it was, say, before about 2013. And that mattered. That has definitely mattered on the upside. It's made the market much more of a voting machine, which it always has been in the short run. But in the long run, it's been more of a weighing machine, meaning the facts over time matter. That the amount, the time frame from when things can be just sort of absurd and then have that get corrected now, it has the time takes to do that has been stretched out quite dramatically. So you could have been an investor for the last 10 or 15 years, and you might think you understand how the market works and you might be doing well, but the rules that are working now at some point will not work, and they'll end kind of dramatic. It'll end rather brutally. I don't know when that's going to be. Could be, a year and a half from now, 2 years from now, 6 months from now. I don't know. But the important thing is to, even though it looks easy and the market's going up every day, it's very dangerous. So you have to hold two thoughts in your head at the same time.
Are you surprised that the markets have held up for as long as they have?
Yeah, well, yes and no. I mean, if I didn't know the things that I'm alluding to that I'm talking about from 30,000 feet, yeah, I'd be shocked. Now I understand why it is what it is, but that doesn't reduce the risk of what can happen when things change. So, yeah, I mean, valuation's absurd in many cases, but that's all that gets back to the passive bid.
Yeah, well, and especially, you know, how the Fed's role plays in all this. And, so what do you think the future of the Federal Reserve is?
I don't think it'll be that much different than what it's been. I mean, um, they're not going to change. And they're going to get a bunch of easy money guys with the people that Trump supports. And the only difference is it'll be obvious to anyone who pays close attention that they're easy money guys. And less people will pretend that the Fed is um, as sort of all-knowing as people have liked to believe it is, right? Greenspan caused, Greenspan was a rounding error compared to what his successors have done. But, part of the reason we had the stock bubble in the late 90s were monetary mistakes on his part. Then when 9/11 occurred, the recession that ensued was blamed on that rather than the unwinding of the bubble, which was already underway. And so the Fed didn't get criticized for that. And then the next they foment a housing bubble. Both Greenspan and Bernanke are yapping about you can't have a bubble in housing. Bernanke's such an idiot. He doesn't understand. He says subprime's contained when it was still metastasizing it, Alt-A and the whole credit stack. And then they come with QE, and then you bring Powell in, and he does QE and QE again, and says the price hikes are transitory. Yeah, sure. The part where the prices went up 100%, that only happened once. But then when they go up one, two, three, or four from there, they didn't get rid of the hike. So the inflation psychology has been completely altered. But each one's been worse. The new guy will be worse in a different way. And so at some point, people will begin to realize that one of the reasons gold's $3,500 an ounce now is more and more people have figured out that these central banks are um, sort of create more problems than they do solutions. How's that?
Yeah, and well, and this is where I've had people on and to explain this to me. Maybe it's just a concept I'm just having great difficulty grasping. The global monetary reset that's occurring and the devaluation of the dollar, and then how does with this administration creating this crypto group, how what they're attempting to do and move this reset into this direction.
Yeah, I don't know that there's a global monetary reset going on. That as as the fundamental problems we have that make the dollar less desirable at the margin, um, when you compare it to the yen or the euro or the Chinese renminbi, I mean, there's no good alternative. Again, that's why gold has done as well as it has. Um, so, the dollar hasn't really been trashed vis-a-vis other public currencies. It's only been trashed against goods and services, which is another way of saying inflation, right? So again, that's why gold is the only currency that isn't the liability of someone else, right? So this is part of the reason why, and it's the only thing you can look at that's big and liquid that you can trade that's got some sort of history, like thousands of years. Crypto is uh, isn't tied to anything. A crypto coin is not tied to any economic anything. You could say gold isn't either, but gold has a cost of production, and at least gold has several thousand years of financial history of being considered a monetary asset. Whether it should or shouldn't be, that's a different question. As to what do the Trump people think they're doing with the crypto, I don't know. I don't think it's a particularly good look for them because a lot of the ideas and policies Trump's pursued, I think, are good ones. Many are not, but the good ones get undermined by things like this with pursuing crypto and making it look as though he's trying to make money when and so it just kind of undercuts him. So I don't really know why the family's out doing that, considering they already have plenty of dough. But they didn't ask my permission, so.
Yeah, I thought the optics of you talked about the meme coins right before he got sworn in, and the Melania coin and the Trump coin, and
Yeah, it was a bad look. They shouldn't have done it. I don't think.
well, but also too, with the Genius Act, and David Sachs and Besson, and some of the idea that you can use your 401k to purchase crypto. Never seen that before.
Yeah, and now they're going to let them buy private equity. So look, I think some of these, I'm not in favor of these decisions. I mean, there's many decisions he's made that the Trump administration has made that I think are good ones, and there's some that I think are poor ones, and you've just talked about two of them.
What are your thoughts then on the tariffs, the impact those are having?
I haven't spent a lot of time thinking about it because it's so fluid. He changes his mind, and now you got the courts involved. So I just decided I wasn't going to try to figure out exactly which each one meant where and in the sum of it all. At the end of the day, they're going to boost prices. So either it comes out of somebody else's P&L or the consumer pays for it, but it's disruptive. On the other hand, it's hard to find a precise investment that you would use to kind of capture whatever conclusion you came to about tariffs because it's also uncertain. And so my way to deal with that is to just hold more cash because Trump creates volatility and uncertainty. And so I've decided to have more cash. And since I have a healthy exposure to precious metals and gold mining stocks, I feel like my cash that I have is protected from inflation because the gold takes care of that. So that's my way of dealing with it.
Well, and I saw right before I got on here with you, I didn't get to read the whole article, but you got China, North Korea, India, Russia. I believe they were all together and talking about they were praising Modi for not caving to the United States pressure on the tariffs.
Yeah, again, I don't really know what to make of that. I have opinions on a lot of subjects. Some subjects I still have opinions on. I mean, the tariffs are going to produce volatility, uncertainty, and beyond that, I don't really have a strong view.
Right, right. Well, and that's what I was curious about the uncertainty it's creating right now. What kind of impact is that having on the markets? Because you don't
But
know.
that basically had no impact because the stock market hit an all-time high based on the S&P and last week.
Right,
So, I mean, it's had little impact. But again, that's because the stock market is not captive to fundamentals the way it used to be, because the passive bid, as long as that money is going into retirement funds every day, every week, then it shows up in the market to buy stocks, regardless of what the news is, regardless of what the price is. and because of the way the capitalization weighting works in the Vanguard index and the BlackRock index, that you get that's why we have these multi-trillion dollar companies. The valuations I think for some of these are insane, regardless of what you think the underlying fundamentals are, and that's a function of a passive bid. So the fact that the market ignores fundamentals doesn't mean that they don't matter. It means the market can ignore them because of the dynamics that I talked about at the start of the show.
Yeah, even look at somebody like Apple, who I've been a user of their products for a long time, and they really haven't evolved into, every model doesn't really do anything that special from the old model, but yet they
Correct.
continue to get these absurd prices for these products, or charge these absurd prices, in my opinion. It's
Right,
crazy.
but even with that, their earnings haven't grown in a couple of years now, right? They've been kind of in the same range, and yet it sells at 30 times earnings. Well, that would never happen in the in the pre passive dominance period, shall we say? That would never have happened. You wouldn't have a company with a market cap like that trading at 30 times earnings with no growth. Never happened. But it's what we have today.
I think we're in one big Netflix reality show right now with all this.
Yeah, yeah, yeah. But again, you don't get the market that you want or the news you want. You just got to deal with what you have. But it's important to understand, what the distorting factors are.
What is something that the administration has done that you have liked?
Closing the border. I mean, and look, we have no policy for immigration in this country. And I mean, we have laws, but we don't, we all know that there's a whole lot of people in the country that have been in here for a long time that came in illegally, but have now become productive citizens. So, but there's a difference between that and the people that raced over the border, during the last administration to get free stuff and just, came in because they could, right? So it has to get adjudicated at some point. You can't, and the fact that the Trump administration is trying to enforce laws, right? We walk around in this country and now shoplifting is legal if it's up to a certain amount. They just look the other way. The fact that we've let crime get out of control, and whenever anyone talks about crime, the mayors in these cities where we all know where the crime is. It doesn't take a genius to figure out the people running those cities have DAs that are catch and release type people. Not This is all destabilizing for society. It's a terrible look. It teaches kids all the wrong things. When you were a little kid, your mother probably said she didn't want you to lie because if you lied, you keep on lying, and you can see it's been writ large in all these different things. The policies that have evolved, in the last 4 or 5 years. So turning back the clock on all of that, I think is very important from a societal standpoint. Um, so, I mean, I think that's really important. And Trump is obviously more inclined to be for free speech than the Biden administration was. The Biden administration went to Twitter during COVID and shut down Alex Berenson and anyone else who was spoke up against the lack of efficacy of the shots and the failure of the masks and all those things, and they shut them down, right? Just like you see in the UK today, right? There's no free speech in the UK. You get a mean tweet, you put out what's considered a mean tweet, and they'll come after you. So those kinds of societal things I think are important, and his approach I've agreed with.
Yeah, you're at ground zero for. I mean,
Lunacy.
I don't know how you do it.
Well, I don't intend to be here. I mean, I'm going to move my residence to Nevada because it's so insane here. I mean, it's a beautiful place and all of that, but none of these cities on the West Coast have been run by essentially anarchists slash socialists have shown any sign of getting better. They keep deteriorating, and I just don't see an end in sight, unfortunately.
Yeah, I was in Seattle, December of 2019. It was my first and only time ever there. So right before the virus,
Yeah.
and I remember thinking going downtown. First of all, beautiful city. Went to Pike's Place or Pike's Market, but I remember thinking, I was like, oh my God, there's so much homeless down here. Like,
Well, you should see it now.
well, that's what I've heard. It's even worse, like to the point where people don't even want to go downtown. When was the last time you went down there?
I won't go downtown. They've hollowed out the businesses, and it's not just the mental health drug issue that we call homelessness. It's the sort of the anti-business environment, and it's catch and release on the criminal side, a denuded police force. It's all of those things. So I just and their approach to um, progressive policies vis-a-vis how they've changed the way the streets work and things like that. It's all depressing. I just won't go down there. I won't go downtown. There's no reason to. There's nothing down there anymore.
Do you follow Katie Davis Court?
Yes, I follow what I follow her on Twitter.
Boy, that woman is one of the most bravest souls I've ever seen. And
Yeah, a lot of these kids are that are get out and and try to illuminate what's going on that the press won't talk about.
she can't go anywhere. She goes to anything where Antifa is, they are all over her, harassing her, keying her car.
Yeah, that's another open sore, Antifa. I mean, I don't understand. They were ready to call anyone who didn't take a COVID shot willingly, or didn't want to be harassed into taking a COVID shot. They practically called you a terrorist. And you got these people around, harassing people, and they leave them alone. It's really quite sad, I think.
What do you think happens then to the city? I mean, still live there. What's the future of Seattle and some of these other progressive cities? Because at some point there's going to be it's got to
Well, yeah,
break.
but look. Portland, bad to worse. LA, bad to worse. San Francisco, bad to bad. It's kind of stabilized a little bit under the last guy, near as I can tell. Seattle, bad. If we enact, it depends on who wins this election. There's a nominee that's worse than the current mayor, which is hard to believe. Look what happened in Chicago. Lori Lightfoot she was a racist for crying out loud, right? And now she went to some Ivy League school to teach, and they got this crazy guy now, and they have what they had these insane, was it 500 and some odd shootings over the weekend, and they're trying to blame it on guns. But the media lets them, so it's insane.
He was blaming it on red states. I heard a clip from his press conference that the guns are coming from all the red states, like Indiana. I don't know if he said Ohio, but Indiana
Oh,
was one
okay.
of them.
Yeah. Okay. So, I mean, my point is, as bad as it's been, as bad as it was 4 years ago, it's worse now. As bad as it was 2 years ago, it's worse now. I don't see any sign that the pendulum has started swinging back in the other direction yet. We'll have to see. I mean, if you look at what's happened in LA, they had the horrible fires, and it looked like there was a fair amount of incompetence on the part of the people who run the city in terms of how prepared they had the fire department. I don't think it was the fire department itself's problem. I think it was a bureaucracy around that. And then they said they're going to help them get permits. And near as I've been able to read, no one's getting permits. So, but where is the hue and cry about that, right? They people protest that they don't want ICE to take illegal aliens out of the city, but they haven't protested, this that their houses burned down, and there's been no attempt to help them get the permits and all the things to fix it. And so my point is, as bad as all this is, I don't see any sign that it's getting better, which means it'll continue to get worse until I don't know what. At some point it'll change, but I don't know when or what'll do it.
Yeah, I read the other day that they were talking about some of that area in LA doing affordable housing.
I read that too. I don't know. I don't know enough about it. I'm not close enough to it. I don't know what the outcome. But one thing I think we can be certain of is people aren't able to start fixing and getting back to their houses back. So what the ultimate agenda is there, I don't know. I certainly don't trust anyone who in a position of authority in that city or that state. I mean, if I lived there, I sure wouldn't.
Well, and it's amazing now how people still rely on the government, but they also, over the last 5 years, the natural disasters or the train crash in Ohio with East Palestine, what happened in Lahaina, L.A., Texas, Helene in Western North Carolina or North Carolina. Some of these people, especially in North Carolina and L.A., they've had these generational homes they can't afford to build.
Right.
And they know it. Private equity knows that. Or venture capital, they come in and just pay you pennies on the dollar for it.
Yeah, I just don't know enough about any of that stuff to comment on, like what's happened. I mean, I do know that the response to the tragedies seems to have been horribly lame. But beyond that, I don't know a lot of details of what the disposition has been of properties and things like that. So, so if it's not something I'm really certain of, I don't want to really comment on it. I don't know enough to you know have a strong opinion
Maybe.
about.
Oh, go ahead. Sorry, let me cut you
No,
off.
no, I was going to say, I've seen some of those stories too about um, um, people getting picked off in terms of people buying their houses and stuff like that. But I don't know enough to know the story to really talk about it.
Well, what I was going to say was going to add. Maybe the wake up call will be if this Mamdani becomes mayor in New York. Maybe that'll. Tr-
I doubt it. I doubt it because if he gets elected, it's not going to be a wake up call because people know what he's going to do. I mean, he may make it worse, but it's so radical. The wake up call may be that he doesn't get elected, that somehow they avoid that tragedy. I just don't know. It's been impossible to say how bizarre and crazy things have to come because before they'll change because that's been a losing battle so far. Nothing has changed. Nothing as bad has gotten better. I mean, and so I don't. If they elect him, it's not going to get better immediately. It'll have to get a lot worse first, I would think.
yeah, and not that I'm following it. Like, I mean, I don't live there, but you're looking at this, and it seems like it's inevitable that he's going to win because Cuomo. He's running against Cuomo and Curtis Sliwa, and doesn't seem like the opposition is that great to stop it.
Yeah, I mean, we'll have to see. You know, um, I don't really want to root for him. And some people think, well, yeah, they should get what they deserve. People that want to have him, but it'll be such a disaster. It won't be good for anybody. I mean, so I just sort of hopeful that somehow he won't win, but I guess we'll have to see. I mean, from what I read, in the primaries, there aren't that many votes, and so his swing in popularity is not a very big percentage of the people who live in New York. So we'll have to see when they have the election what happens.
And then we've talked about all this, and then we come back to the markets and just the economic standpoint. You're like, how the way our society has gone, the decay and the rot. I mean, who would ever thought a beautiful place like Seattle there'd be so much rot and decay where it's acceptable to shoplift under $1,000 or whatever it is, $900, and you don't get prosecuted, you don't get arrested, and
But
yet,
it's
go ahead, sorry.
No, I was gonna say, but it's the all the big cities on the West Coast are the same. You go, all the cities that are controlled by liberals that have the liberal DAs, the catch and release types. It's the same in all those cities. The same problem is in every one of those cities, and it's the policies. But the vote and the voters won't change that until the voters get fed up and saying, "Oh, this is too far." And then, but what largely happens in a lot of these cases is people that have some money and voted for those policies wind up leaving and they go to the new place and they vote for the same policy and they ruin that place. So, you know,
That's what's happening here in Arizona.
yeah, I know, I know, I know. So anyway, it's sort of depressing, but it's just that has nothing the market doesn't care because the market is not the market like you grew up thinking it was. This passive bid has completely warped things such that fundamentals only matter over a really long period of time. And in the short run, which is denominated by, you know, the days and weeks and all of that, none of that news matters. The passive bid doesn't care. It's got money. It has to buy. Doesn't care what the news is. It's not going to change anything based on the news. And so when you get enough of that money and it was as big a market share, like half of the market is that way, then you get the environment that we have.
Yeah, and uh, as we've talked about it now, these larger cities, and how What will be the KO? I mean, do you see at some point that there's the system, the financial system I'm talking about here, will break, or it's just going to continue to
Um,
limp along?
that's I mean, that's a little too binary. I mean, the finan we're not going to have another '08. That was a unique situation whereby the banks acquired brokerage firms that were creating this trashy paper based on the fallacy that home prices could only go up, and the lending standards were so low that there was no way some people were ever going to be able to pay back the debt, and that infected the banking system, and that almost collapsed. The financial system is not in that same state right now. Yeah, granted, a lot of the commercial real estate loans probably are need to be marked down and things like that. The real problem is that the government debts are unsustainable. I mean, $35 trillion and $1 trillion a year in interest expense they're big unsustainable numbers. So if there's going to be a wrecking ball, it'll probably come from the bond market. The Fed cuts rates, and let's say they cut short rates, and while short rates decline, rates from 7 years out to 30 increase. That's what happened when they cut rates a year ago, and I think that's what's going to happen this time. And at some point, the bond market not cooperating creates a problem, even for the passive bid, because there's a certain balance between equities and bonds that they have in some of these retirement plans. And if bonds get cheap enough, and they rebalance, that steals money away from equities. So the bond market is liable to be the ultimate disciplinarian. It would have been currencies in the old days, but currency markets are sorry, all these other currencies are weak as well for the same similar reasons, too big of debts, too big of government debts, and things like that. So the the disciplinarian will likely be the bond market not cooperating. And then they'll probably try yield curve control. So this is going to be a whole prolonged process, probably, that'll play out over the next year or so, I would think.
So do you anticipate when this starts? Because I mean, the speculation is the Fed is going to start dropping next month.
Yeah. Well, if I think we'll have to wait and see. My view is when they cut rates, longer rates are going to rise. And that'll be the second time that's happened in the last couple of years, and then it'll start to be a trend if that's what happens. And then, that's a big deal, because if the central bank lowering short-term rates causes the bond market rates to increase, not decline, then they can't ride to the rescue of any sort of financial turmoil. So, and my shorthand way of saying is that the bond market is taking the printing press away from the Fed. And I think that's what's going to happen. But we'll have to see, and we'll have to see if it starts right away or not. I mean, I could be wrong about that.
So you actually broke up there for a second. So if they start dropping next month, then the short term rates go down. Then the long term rates that will impact the long term rates. But you're saying
Well,
is go ahead, sorry.
no, normally, there's the yield curve, right? Short rates are lower, and the farther you go out in time, rates are higher. But if they normally, what happens when they cut short rates, the whole curve comes down. Rates all across the yield curve decline. Well, what I'm saying is, I think what's going to happen is they're going to cut short rates, and longer rates are actually going to increase. So mortgages might increase, the mortgage rates might increase. And again, that's what happened last year to some degree. And then it kind of all got lost in the shuffle of the election and all this other noise. So if it happens again, now it will happen two times in a row, and it's pretty soon it'll start to look like a trend. Now, I don't know that that's going to happen. That's my hunch, and I'm going to be looking at it very carefully, because if I start to think that's going to happen, then I'll short bonds as a hedge against other things that I have.
And if that does occur, that'll freeze out even more from a real estate standpoint. It'll be less people will
True,
be able to buy.
true. That's true too. Yeah. But then that might bring down houses, which will help other people. So, there's a lot of factors at work here, right? I mean, the rates matter and the price of the house matters, you know?
Which these home values. I mean, some of the. I mean, I even where I'm from in Northeast Ohio, and I see some of the prices these houses are selling for. It's insane to me.
Yeah, yeah. I mean, I would agree with you, but but I mean, it is what it is.
How will that impact then? Again, if all these things occur, how will that impact from a renting standpoint and from a renter's market, in your view?
Well, I mean, assuming you're talking about cities where they don't have rent control, I would think that uh, it's not exactly obvious because a lot of rentals are in multifamily, right? Not in single family. So does that mean more houses will be available to be rented? Maybe, but I don't think that's a very big market relative to the multifamily, apartments and things like that. So I'm not sure. I'm not sure how. I mean, I guess at the margin, maybe it'll bring rental rates down but I don't know. It's not obvious to me. I don't really know where rental rates would go, to be honest.
It's I can't believe, again, in Phoenix where I live, how much they continue to build and build and build these
Well,
$100 million. It's
in that case, if you get an overbuilding in a locale, then you can have a localized slump in real estate, and you can get some relief on prices. And then, of course, if a multifamily unit trades hands at a lower price, the new owner might buy it and come in and reduce rents. But it depends. You need overbuilding in that part of the market, right?
Yeah, and also too, what I'm seeing, seeing it here, but I'm seeing it in Northeast Ohio where I'm from. I'm seeing a lot of these homes, like these track homes, and they're renting right away. They're not for sale.
Was that always the plan? Were they were going to be rentals or no?
I don't know if initially that was the plan, but I'm seeing them. Like I was back in Northeast Ohio. These are nice suburbs, and some of the other suburbs that are a little bit older, and I'm seeing the same models of these track homes.
Well, the question is, whose balance sheet are they on? In other words, I mean, is the builder carrying them? I mean, somebody has to make the mortgage payment on the property that then gets rented out, and so like, if it's a tract, I mean, who owns it? I mean, Toll Brothers still owns it, just to pick one. I mean, without knowing more about what the dynamic is behind the scenes, it's hard to have any kind of a view. I don't know who owns the paper.
Well, and where I'm going with this is, I had somebody send me over an article this morning talking about how D.R. Horton and Lennar are these build to rents models that they've moved to, and so that's what makes me wonder. I'm actually going back there in
Well,
a
if
couple
that's
weeks.
their plan, I'm depending, assuming they're look, I mean, assuming they have it properly financed, then build to rent would obviously, if there's a surplus of them, that would bring down rents for sure, right? But again, it's like I said before, it all gets down to each locale, what the dynamic is there. Where's the overbuilding? Where's the underbuilding? If or real estate is an intensely local market, right? You can't just pick up the house and move it and arbitrage away the difference in prices from state to state or county to county.
What do you think? From the standpoint of commercial real estate and how that could play into all this.
I think it's probably more a problem for who owns the mortgages, right? To the extent that certain regional banks have exposure, that's a problem for them. If pension funds have a lot of that mortgage paper that they own, that's a problem for them. Because in places like Seattle, commercial real estate I don't think it's going to come back for a very, very long time. The local paper set admits that vacancy rates in downtown are over 30%, which means they're probably closer to 50 because the paper here is worthless and would lean towards it's not as bad as you think. So that's why I'm saying it's worse. So I mean, commercial real estate. Now, I don't know what it's like in some of the better, cities and states where the economies are better. Like, I don't know what it's like in Florida or other places where they're doing quite well. But in all these big cities that we've kind of talked about, where there's all these issues, I think it's a disaster. And you see on Twitter all the time, there's a clip that goes by with, this piece of commercial real estate's, sold 5 years ago for one price, and now it's selling for 25% of that price. Well, I mean, there's a lot of unmarked assets out there that would be marked lower, obviously, if they were marked to market.
Yeah, it was a triple net investor, I think, on Twitter, right? That always pointing out these buildings that were maybe bought.
Yeah. I think that's the guy. Yeah, yeah. I think so. I think so. Yeah.
And it's like, I've had these conversations with other people too. It's like, these skyscrapers, these 10, 15, 20-story buildings in these downtown areas, what are you going to do with them?
Yeah. Because repurposing them for residential is a problem, I think, and maybe a lot of these downtowns have excess of residential as well. And who wants to live downtown if there's no downtown and you're dealing with mentally ill mentally ill people and drug users who can go in and steal and live on the street. I mean that doesn't make you want to move down there to be part of that neighborhood, does it? So. Back to the issue we were talking about before, these cities have real problems.
You know what was funny, Bill? It's like these cities, you think they would know this, and I'm gonna reference where I'm from, Cleveland. They're gonna put up financing $4 billion, not the city. They're moving to another city outside of Cleveland, a suburb, to build a football stadium that's over $4 billion with $600 million taxpayer money to build this thing.
It seems crazy, it seems crazy that we're subsidizing the NFL, but hey, that's what people want. I guess that's what you get, right?
But we're talking about all this disaster in all these cities. Washington D.C. They're getting a new stadium. Las Vegas is getting a baseball stadium.
Yeah, well, Las Vegas at least is doing better than the cities we just talked about.
But this is where their priorities are. So it tells me maybe we're farther off from some type of breaking point for.
Well, yeah, but that's where the dollars are. I mean, the people that own NFL franchises and do this stuff, they have a lot of money, they have a lot of influence. They can, the local politicians probably get helped out, get donations, whatever. I mean, we can see the grift in Congress where these people go to work there for a couple hundred grand and then 20 years later they're worth 5, 10, 15, 20, or in Nancy Pelosi's case, several $100 million. And despite how many times Elon Musk asks the question, where does that money come from? They should be audited. Never seems to happen, does it? So that's just what you're describing is just the power of the people with money that influence the politicians that, have to kick in money to build a stadium when they should have to do it themselves. The argument the other way is, well, yeah, but you're going to get lots of jobs out of that, blah blah blah, tax revenues, blah blah blah. But anyway, that's why it happens the way it happens.
And it never happens either. I mean, I told my mother actually lives in the city where they're building the stadium. And she knows it. She's like, I'm not going to get any benefit from this. I'm like, I know. That's how these things work.
Right. But it's uh the power of the politicians and the grifting that I think is the reason why those things happen as they do.
I know I'm running out of time here with you, Bill, but what's at the top of your list right now of things that you're watching, keep an eye on?
Well, I mean, right now the bond market I think is important because I'm waiting to see how it's going to respond to the Fed cuts. That'll be interesting. And then will be interesting to see if how the stock market responds as the bond market weakens, assuming it weakens. So that the bond market and the linkage between the bond market and the stock market, I'm interested in because as we saw in 23, the bond market was weak enough that it actually hurt the stock market because it siphoned away some of the flows from that passive bid going into equities. And given how stretched the market is, that would be, you know, something to pay close attention to in case it led to any kind of trouble.
What about on the international front in regards to Europe or Asia?
I'm not really very focused on it. And a part of my reason for not worrying about a lot of these troubles as much as others might is my position in gold and gold mining stocks hedges out a lot of the risks from these bad policies, in my opinion. So I can be somewhat relaxed about it because I feel like I'm protected. I have been protected from it, and so there are certain things that I feel like I've got that covered. If that happens, I got that covered. The thing I don't have happen is if the stock market starts to get beat up, well, I'll need to react to that because I own securities. And so that's why I'm worried about the bond market and how it impacts the stock market. And if that started to look like it was leading to trouble, then I would short some things to hedge out my other long positions. I ran a short only fund for 12 years, so I understand that side of the business pretty well.
What do you tell somebody, Bill? They say, I mean, you must get lots of emails, lots of people asking you, Bill, what should I do? What should I do? What should I do? Which, I'm new to
Well,
this, or
well, I've been writing an investment column every day for, gosh, almost 30 years now. No, is that right? Yeah, 30 years almost, 29 years. So you can't give blanket recommendations because everybody's situation is different. How much money they have, how much risk they can take, how old they are, all of those kinds of things. One of the things I've advocated for the last 25 years, 25 of the 30 years I've been writing the column, is that you need to have some exposure to precious metals to protect you from the mistakes of the Federal Reserve. I wrote the book in '08, Greenspan's Bubbles, The Age of Ignorance of the Federal Reserve, trying to explain, the Federal Reserve was kind of, or Greenspan was a menace. But of course, he turned out to be, everyone after him has been worse. So I think you have to protect yourself from the problems that the problems that bad policies cause. And one of the best ways to do that is through precious metals, right? Now, gold's just had a $200 run, so I don't mean you run out to do it tomorrow, but people need to think through, how do I protect myself? You have to think about the underlying issues, and if they go badly, how do you protect yourself? You can't just say, "Oh, the stock market goes up every day, so everything must be okay." Well, no, the stock market goes up every day because of the passive bid. There's a reason why gold is $3,500 an ounce when, 25 years ago it was $300 an ounce. I mean, it's had a big move, but the size of the problems are kind of out of control. We have basically an unsustainable national debt and budget deficit, and we're doing nothing about it. Now, the administration is hoping they can grow their way past it. Maybe they can, maybe they can't. We'll have to see. But the if they it can't, the things they'll do will likely cause gold to rise. So I like to view it as my insurance policy. Only it's I think that's the best way to think about it. And, not as it's an insurance policy, you're going to pay the premiums and never see the money again. You're going to pay the premiums and hopefully have that accrue and grow and all of that.
and do you expect silver to rise at a faster rate?
Yeah, when I say gold, I mean gold and silver. Yeah, I mean uh, silver is much, much, much more volatile. But if we're going to get a real move in gold, as has kind of started again, I mean, there'll be a hellacious pullback one of these days to scare the snot out of everybody. But yeah, I mean, silver will go up in percentage terms, particularly if the United States public gets involved. Gold has gotten to where it has, not because the public in America is involved. It's because of central banks buying and Asians. And in fact, so if there starts to be an increase in interest in by Americans, you'll see an increase in the outstanding shares in the GDX ETF, that's the mining ETF. You'll see it in the GLD ETF and the silver ETF. And when that starts, it could be quite a big run for a year or so, however long it takes. But the price is where it is without the public really being involved.
Where can people find you, Bill?
Mike, I'm on Twitter at FleckCap, and my website is fleckensteincapital.com. But it's a pay site. It's $130 a year. Not much money, but and I write a daily column and I answer questions there.
I appreciate you doing this, and I look forward to continuing to follow your work and more conversations ahead.
Okay, thanks a lot.
Mic drop.